Gold is a symbol of wealth and status that's lasted for centuries, associated with all things luxurious, from jewelry to sports cars to even high-end dining. It's one of the most beloved and influential commodities that exists in our market today. With an average daily trading volume of $183 billion, gold is one of the largest financial assets in the world.
There's three kinds of money today that you guys got to be aware of. One is God's money, and God's money is gold and silver. So this is silver, and this is gold. The reason I brought it is most people don't know what it looks like. And then there's government money, which is fiat currency, which is the dollar, the yen, the peso, the euro, the yuan. Fake. And everybody's working hard for it. It's like eating fake food or drinking fake water. That's why people are getting sick financially, because they're working for fake money. Okay? And then there's fake assets, which is another part of the fake millennial, the fake generation series. But the reason I brought this here is most people haven't seen it. This here is real silver, plata. Okay? That's what it looks like. And so in 1972, and this here is gold. This is God's money. This is what God's money looks like. The reason I call it God's money is you can't fake it. You know, you can fake it with a fake ETF, like a gold ETF or a silver, which I don't touch because it smells as bad as the guys that printed that crap. You know what I mean? Jesus. But this is real money. So you look at this here. When I first started buying that, that was $1.40. Today, that's $16. And this here is oro, gold. And the reason we brought it in is most people haven't seen or touched. This is real. This is God's money. Why did I say it's God's money? Because it was here when the earth was created. And it'll be here when we're all dead and gone. When you're saving those fake dollars, this will still be here. Or those fake ETFs or those fake stocks. So this here is called the green box. There's 500 of these little tubes like this. 500 coins in here.
Yeah, we're not enthused about gold. People historically have felt that was the first refuge from a currency that was going to be decline in value. But you know, so's a barrel of oil, so's an acre of land, so's a piece of Coca-Cola. So See's candy. See's candy, if the dollar goes down 50%, we will be selling See's candy for double the present price. We'll be getting the same real price for See's candy. People will work the same number of minutes or hours per week in order to buy a pound or a 2-pound box of the candy. So we would much prefer some asset that is going to be useful, whether the currency is worth what it is today or 10% of what it is today, or whether people are using seashells in order to transact business, because people will go on eating and they'll go on drinking and doing various things, and their preferences will translate in real dollars into more or less the same economics for us. And we would not trade the ownership of those kind of assets for a hunk of yellow metal, which has very little real utility except for people who are looking to flee from the dollar and in our view really haven't thought through the consequences of what fleeing would, where they should flee.
See, the purpose of the central bank or the Fed or all, you know, the Japanese bank, the Bank of Japan, or the European Central Bank, they pump out fake money. The purpose of central banks like the Fed is to protect the banks, not you. They're a criminal operation as far as I'm concerned. You're going to find that most of my talks is about the Fed. So I would recommend you guys buy this stuff. Don't save money. Don't save government money, because they're corrupt as hell, as you know. Save God's money.
It's very interesting if you go on CNBC and say that bonds are kind of a poor investment. You know, people don't get mad at you. You don't even hear from the Treasury. I mean, you can knock almost any investment, and people may get a little irritated. But when you talk about gold, And of course, that says something about their motivations for ownership. They want people to agree with them. They want everybody to get so scared they run to a cave with gold. And caves might be a better investment than gold. I mean, at least they're not producing more caves all the time. So they want people to be as afraid as they are, because that's what's going to produce an increase in prices. Incidentally, they're right to be afraid of paper money. I mean, they have their basic premise that paper money around the world is going to get worth less and less and less over time is absolutely correct.
This corona crisis, as I call it, it's a smokescreen for something that's been going on for years, and when I was your age, I was in Vietnam, and I was flying for the Marine Corps. When my rich dad sent me a letter saying, watch out, the world's going to change. And the world changed because President Nixon took the dollar off the gold standard on August 15, 1971. But back then in the 70s, being on an aircraft carrier, I didn't get that letter for like 6 months. That's how long it took to get to me. Now you guys go ding, ding, and you're there. I mean, the world is really no world at all. But he warned me that the world would change, and I didn't really understand it at the time. But that's when my curiosity about gold and money and all this really changed. So today, when I look at the corona crisis, but more the financial crisis, it's really, really horrifying, because the financial crisis started back in 1971. And the reason I'm a rich man today is because, I knew something was wrong. I didn't know until 72. When I flew behind enemy lines to go buy some gold, and I didn't know what gold was. It was illegal for Americans to own gold in 1972. And I thought that was really strange. So my life brought me up to this moment. So I'm very happy to be talking to you, because the corona crisis, while serious, the biggest crisis is the financial crisis. And your generation, the millennials, have been screwed. I mean, big time. Big time. I mean, if you understand how money is created, money is credit and debt. That's all it is. Credit, debt, and taxes. That's what money really is. But they don't teach you that in school. So today, the reason the world economy is crashing goes all the way back to 71. But what happened in 71, they could just make fake money, and they can keep printing fake money. And this is the US dollar. The US can keep printing fake money for a number of years yet. And the only way they could keep the economy expanding, they had to find people stupid enough to get into debt. So when I say, because the dollar is dying, I'm just not BSing you. I am a student of it. And it goes all the way back to the original, not the original, but the book I read here is called The Grudge of Giants. Grudge, gross, universal passions. So that's how I know the dollar is dying, the stock market is way high, and gold is high. They shouldn't be. And the reason is because they're ripping us off. They're printing so much money to keep the stock market high, so mom and pop stupid person who has a 401k or a pension, I don't have to worry. I got a pension. The stock market is up. And then meanwhile, gold is going up. The reason gold is going up is a common theme, because they're printing trillions of dollars. You cannot have both going at the same time. I hope I'm wrong, but the US dollar is dead. And when it's got about 5 more years, don't get me wrong, it's still a strong currency. But gold will get stronger, so will silver, so will Bitcoin. Because of this here is the school teachers, our governments, the Treasury, Wall Street, and the banking system, the Federal Reserve Bank, are ripping us off.
But not all investors are in love with gold. Warren Buffett has spoken out numerous times on his doubts, calling it an asset with no utility.
Berkshire versus gold. You want to talk about how that's performed over the years?
Yeah, but we can go beyond that. But certainly, when we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce. And gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now,
Warren Buffett won't touch gold.
Mm-hmm. Okay, yeah.
You think he's wrong?
In my opinion, the biggest news of all in the last few months was that Warren Buffett, the Oracle of Omaha, dumped bank stocks, and he dumped airline stocks, and he got into Barrick Gold. In other words, he shifted into gold mining. What? And he and his buddy Munger, have badmouthed gold forever. Now, they own some silver, but they badmouth gold forever. And so that is the biggest news of all, because it says something is really fundamentally changed in America. Foundationally. If he's dumping airline stocks and he's dumping bank stocks, the question is, what does that mean? And CNBC and the other CNBS, as they call it, they don't cover it. Nobody covers it. And this is bigger. Trump or Biden, it's important. But Buffett going into Barrick Gold is 1,000 times bigger news to all of us, because Trump or Biden have no possible power. They cannot stop what's about to happen. So let me say it again. The biggest news of all is not Trump or Biden or COVID. It's Warren Buffett dumping bank stocks. Can you imagine that? And dumping airline stocks. And then buying Barrick Gold. We don't know what else he's bought. And the question is, what does that really mean?
Warren Buffett is perhaps the most well-renowned figure for his dislike of gold. He has considered gold to be an unproductive asset that pays no dividends or interests. In August 2020, Buffett made headlines after purchasing $562 million worth of shares in a gold mining company. 1 year later, Berkshire Hathaway's 13F filing later revealed that he had exited the gold position altogether by the end of 2020, reaffirming his investment philosophy on gold.
Land, you can get somebody else to do all the work, give them a percentage of the crop, and you can sit back there for 100 years and get a percentage of the crop, and you still got the land when you get all through. I will guarantee you that farmland over 100 years is going to be gold, and so are equities.
So right in front of our eyes right now, we can see capitalism, socialism, and communism. That's what I'm concerned about. And the average person without financial education from our schools can't see it. They can't see it. So we're shifting to communism right now, central control of the economy. And then there'll be an IMF bailout, International Monetary Fund. What I say in private, when the IMF steps in to save you, like it did for Greece and Brazil and all that, IMF stands for I'm fucked. That's what it means. So when the IMF steps in to save America, just say to yourself, oh, I'm fucked. That's what it means. the monetary system has been blown apart so bad that a foreign government, comes in and they're going to start giving us more fake money called SDRs, special drawing rights. I don't know what they are, but they're going to give us more fake money. So that's the future. So that's why I said, won't free money destroy the USA? The answer is yes, destroy the world. So what should I do? I always say, gold, silver, God's money, Bitcoin, people's money. You want to get outside this corrupt system. Bitcoin is open source. That means the central banks can't mess with it. Gold and silver are God's money. They can't, they can try, but they can't make any more of it. So what happened is these fake financial planners, God, they're terrible people. They tell you to invest in the long term in the stock market. And look at this chart here. This is the Dow. It's at an all-time high. Why would you invest in the stock market? The Fed, which is a criminal operation because they only protect the banks. The stock market is an all-time high. Would you want to get in now?
My dad was a huge gold enthusiast, so I sat around the dinner table. My two sisters are here too. They will testify to it. We sat around listening to the virtues of gold, and that was in, we'll say, 1940. And gold at that time was $35 an ounce. And we would have had some storage and insurance costs. And, here it is, 65 years later, world wars, nuclear bombs, all kinds of things. And the compound rate from $35 to a little over $400, less those expenses, is not something that causes me to salivate.
And so look at housing. You guys always complain, oh, I can't afford a house. Well, wait till it crashes, then you buy a house, right? So in 2008, after it crashes, that's when I bought real estate. So right now, look at the stock market, all-time high. Real estate's an all-time high. Your phony education is an all-time high. Look at medical costs at all-time high. And these phony, fake financial planners are telling you to invest for the long term when the market's at all-time high. And what blew it into the bubble was the Fed. The Fed kept printing money, it just kept blowing it in this bubble. So meanwhile, little silver, it's $15 on this chart here. It used to be as high as 50. Do you know? Yeah. $15 is a joke. So if you hold, and this is not an investment. I'll show you a little about this. I predict, and my predictions are often wrong, that if you buy silver today at 15, in 10 years it'll be worth 100. Because they keep burning it up, keep demanding it. So would you rather save the dollar, which is going down, or save silver, which is going up?
Gold is an enticing asset for investors. It's been around long enough to feel reliable, durable enough to be stored long-term, and scarce enough to be considered precious. Compared to other precious metals, it has a wider variety of real-world applications that provide a constant demand for the metal. Central banks and financial institutions also play an important role in the demand for gold. In 2021, central banks held more than 35,000 metric tons of gold, about a fifth of all the gold that's ever been mined. The International Monetary Fund holds about 2,814 metric tons of gold, valued at around $158.5 billion. Many investors use gold as an asset to diversify risk due to the fact that the metal is known to hold its value over time. Throughout history, gold has been most popular for its ability to hedge against any sort of market volatility. Take the Great Inflation of the 1970s, for example. Between 1970 and 1979, the US suffered from one of the worst inflation rates in recent history. Within this period from 1973 to 79, gold showed an impressive return of 35%, an enormous gain compared to any other commodity. The same goes for deflation as well. Gold tends to be the most sought-out commodity during times of economic or financial crisis. Between 2008 and 2012, following the Great Recession, the value of gold increased dramatically from about $1,150 per ounce to around $1,970 per ounce, adjusted for inflation. Gold prices also reached new heights during the 2020 recession caused by the pandemic, with prices reaching an all-time high of $2,021 per ounce overnight. settling above $2,000 for the first time in August 2021. But whether gold is great for hedging is widely debated among experts. More recent analysis has shown that gold's correlation to inflation has been relatively low. In general, it's yielded mixed returns for investors during high inflationary periods, suggesting that using gold to hedge might be more of a gamble than a safe bet. While gold might have won big between 1973 and 1979, gold investors lost 10% on average from 1980 to 1984, when the annual inflation rate was at 6.5%, and another 7.6% from 1988 to 1991, when inflation sat around 4.6%. As a long-term commodity, gold also comes short in terms of returns compared to stocks and bonds. Since 2011, the S&P 500 showed an annualized return of 14.55%. The annualized return for a 10-year Treasury note sat at just 2.57% for the same period. In comparison, gold's 10-year annualized return was below zero at negative 0.05%.
It's prudent portfolio management to have maybe a small allocation there, but this is not an asset that you want to be heavily entrenched into if you're looking for long-term yield. So I would agree with Warren 100%, from an investor perspective.
If history has proven anything, the influence that gold has over the world isn't going away anytime soon.